Hey, this is Tom, and yesterday was the anniversary of the all-time high of Palantir, $39.22 on February 8th, 2021. Today, we're looking at whether 1 year later, at $13.50 per share, which is one-third of that, this is still an attractive investment. Do I still think it's a $1 trillion company? What are the risks? What changed? What am I looking forward to seeing in the Q4 financials in a few days? Everything that you wanted to know about Palantir 1 year later after that high and where I think the company is headed. But as always, don't click nothing, don't smash nothing, don't buy nothing. Let's do this. So let's be honest. Investing in Palantir is like looking into the abyss and saying, bring it. Nothing about it is normal. It's chaotic, it's strange, it's weird. It's an agent of chaos. I've never seen anything like this. Nothing about this company is normal. Everybody did SPACs last year. These guys direct listed. While everybody basically chasing after political correctness, they're doing the opposite. Moving to Denver, speaking their mind about China and the enemies of the US, things I'm passionate about, but most people don't like to hear because it's not nice. It's not kumbaya around the campfire. And mainly, the two main guys in the company could not be more different. One is a hyper-corporate guy, Peter Thiel. The other one is like a Albert Einstein lookalike. One is a socialist, left-wing radical. The other one is a right-wing radical. I mean, they are nothing alike, and yet they get along for 17 and on years like it's nobody's business. How can this be? What's the story with this company that even 2 decades into its existence, nobody really knows what they're doing? I mean, nobody really understands. And that's part of the appeal. That's part of the magic. In fact, that was intentionally done to create a moat, to create a monopoly, and take over a category that they themselves created. So that's kind of the genius of this company, if you actually think about it. And as always in my videos, the bottom line comes first. And what I'll do first is I'm going to give you my updated target price. But before I do that, let me give you a quick disclaimer. You need to relax. Listen, I got a lot of money in this company. A lot of money. 40% of my entire portfolio is in this company, which is highly insane, crazy, and not normal, which is exactly what Palantir is, in my opinion. But there ain't going to be anything new about this company for another 5 to 10 years. It's going to be a bumpy ride until we find out if this is the next Microsoft/Amazon. It's another 5 to 10 years. I'm either going to be a multimillionaire or this is going to go to the toilet. Nobody really knows, and we won't know for another decade. So we can enjoy these back and forth and these articles and these screaming matches, but none of this matters. If you hate the stock, if you don't like the valuation, just don't invest. What's the problem? Why do people get so emotional about it? There's so many other stocks you can go and talk about. If you don't like Palantir, that is fine. I totally get it. I'm not even mad. Now, the second disclaimer I want to actually mention here is the stock-based compensation. There's a few things I want to clarify. Palantir has basically given up half of their company over the past year. They went from 900 million shares to 2 billion shares in the course of a year, and a lot of people are bothered by that. And that's okay. If you don't understand why stock-based compensation is critical to the survival of this company in its upcoming battles against Microsoft and Google, then it's okay, just don't invest. Now, I'll explain in a second why stock-based comp and giving away half the company at this stage actually makes a lot of sense. But if you don't get it, just don't invest. Now, the third disclaimer has to do with me and my channel. A lot of you have noticed that I'm doing less and less Palantir content lately. The reason is because I don't want to be, and I'm not, a Palantir channel. I'm not going to make a video every time Alex Karp or Peter Thiel farts or, takes a wet one. I don't care. I'm only going to talk about important, critical stuff or basically these deep dives as I'm about to do right now. I don't want to make daily Palantir content. There's enough of channels that can do that for you. That ain't me. I'm just going to give you stuff that I think are critical and important, like in this video, because I think a year later, after the 39.22 per share, while we're at 13.5, I owe you an update where I stand and what has, if any, changed. So let's do this. Where do I stand right now? So if you remember, the company direct listed at $10. Actually, on January 24th, not too long ago, it dipped all the way to 11.7, which is the all-time low, I guess, since that DPO. Now we're back at $13.5. Now, In my personal opinion, and again, this is not financial advice, just my own opinion, which might be inaccurate, might be wrong, might be the ramblings of a madman. In my own personal opinion, without talking about the $1 trillion valuation, in my own personal opinion, any price below $35 per share is a really good price for this company at this stage. If you want to be extra careful, extra conservative, anything below $25 is still good enough. In fact, I'm going to show you in a second my ultra bear case DCF where I actually get to a $25 price, even maxing out the worst possible scenarios for this company. And now let's go through my DCF. Now, I just want to mention that these numbers you're seeing on the screen right now, they're extremely bearish. This is my bear case DCF. I want to be as bearish and conservative as possible. So what I did here, I assumed a 30% growth until 2027, nothing beyond that. I also assumed 21% tax rate. I assumed a 10% discount rate and capex of almost $200 million, which is quite more than I think they'll use in the next 5 years. A 4% perpetual rate right here. And as you can see right here, 18 multiple, although I think they deserve a 25. Right here, we have the debt, which is 0, the cash, which is 2.3 billion. And not to keep you on for too long, this is the actual result. So the average for me is $49 billion. Current price is $26 billion. If you want it in share price, here it is, 13.2 versus 24.46, 85.66% upside just for the absolute bear case of this company. So if you want a simple rule of thumb, bottom line, my target price is anything below 25 is the buy for me at this point. And if you just needed that, that's fine. Go right ahead. No hard feelings. If you want to hear my full analysis about the business model and what I'm expecting to see in the Q4, plus the potential weaknesses of the company and the risks, grab a coffee, grab a beer, and let's do this. So let's start with the strength of business. I think that topic does not get enough attention on YouTube and even on places like Seeking Alpha. So the business model for Palantir is extremely sticky. And even though it sounds like a bad thing, it's actually good. So basically, just the financials and the stuff that are public knowledge can teach us a lot about the strength of the business, the stickiness of the clients, and what they got going on for the next 5-10 years. Listen, just in Q3 alone, they signed 54 new deals, over 1 million per deal. 18 out of those 54 new deals were 10 million and above. Their top 20 clients have contracts for another 6 to 10 years. That ain't a walk in the park. Not to mention that they have deal value of $3.6 billion already secured. That means basically that their annual revenue as it stands right now is secured for the 3 years that are about to follow without selling any more services. That is insane. Just look at December. In December alone, they announced 4 new deals worth about $100 to $200 million. And just in Q3 alone, they increased the customer count for them by 20%. So the customer count went to over 200 from 150, 160 in a single quarter. These are not things that are easily achieved. And the one thing I feel that a lot of people don't understand is the progress in the free cash flow. Most of you already understand that they're about to close the year at a significant positive free cash flow. In fact, for the first 3 quarters of the year, they were at $320 million of free cash flow. Now, if you just look at what happened on the previous year in the same period, the first 3 quarters of the prior year, they were at negative $285 million of free cash flow. That is insane. Such turnaround in a year just makes the whole conversation about them not being efficient, profitable, laughable. Not to mention the fact that in Q3, they were scratching the $400 million for revenue, jumping 36% to $392 million from the previous year. Not to mention the fact that their top 20 customers went up on average from 31 million per customer to 41 million per customer. That is an insane change in a single year. So if you ask me how they're going to finish the year, I'm going to tell you right now, it's going to be $1.5 billion in revenue and 400 in free cash flow. And that's just the beginning. So now let's talk about valuation. And a lot of these so-called experts like to tell you that 17 multiple for price to sales for Palantir is so high. It's unreasonably high. So first of all, forward price to sales for Palantir is actually 13, just a point of reference. But let's assume it's 17 for a second. Instead of comparing it to companies like JP Morgan and Ford, Let's compare it to similar companies like Snowflake, like CrowdStrike, like Datadog. So I have it right in front of me. So Snowflake has a price to sales of 80, CrowdStrike 30, Datadog 47. And I just want to remind you that Snowflake, with its 80 multiple on price to sales, which is more than 4 times higher than Palantir, actually got a massive investment from Warren Buffett. So honestly, I don't know how accurate it is to say that Palantir is expensive at 17 multiple. Time will tell. Not to mention the fact that their balance sheet is as clean as a whistle. No debt, $2.3 billion in cash, and 3 times more assets than liabilities without goodwill. This is as good of a balance sheet that I've ever seen. Very not typical for a company that's considered to be a loser and a 17 years underachiever. Seems like they know what they're doing. Look how extreme their valuation is. Currently trading at $26 billion market cap. Just add up the cash they have and the remaining deal flow, which is pretty much just cash alone. It's already $6 billion, just the cash the company has or will have in the next few years. I mean, valuing a company like that with this growth at $26 billion is just a joke. Now, I do want to talk a few words about the moat of the company. Now, this is a company that's been developing a superior product since 2003 for millions and billions and tens of billions of dollars paid by Uncle Sam. The Department of Defense actually paid a lot of money to Palantir to build this tool that eventually birthed Foundry. Now, it's going to be very hard to replicate. In fact, on the commercial side, nobody out there can give you a full stop shop platform like Palantir. Of course, there are specific competitors, companies that will give you an ERP system, companies that will give you preventative maintenance systems, but nobody that can give you one spaceship to cover everything you need in your data management system. Nobody has anything like this. Not for long. I think at some point, Microsoft and Google are going to jump into this business because it's freaking amazing. But until they do, Palantir will remain a monopoly and will continue to create its network effects, which it's been doing phenomenally. For example, with Skywise, which is pretty much a derivative of Foundry for airlines, every airline which gets Skywise actually adds on top of it every supplier they work with, every subcontractor they work with. So that network effect that Palantir is creating is going to be so strong by the time that the competition actually comes in. I think they're going to be primed for success, but time will tell. Now, I don't know a lot about the government side of business. Actually, nobody does, but at that side, they're literally monopoly. Look at the lawsuit they just had with the Department of Defense or Air Force, where they literally forced them to use their platform because there's no other solutions. I mean, there it's sticky, the information is sensitive, the clients just want it to keep going. They're never going to lose the government business. Nobody's even close to them on the government side of business. But since I see the vast majority of their upside and the future growth in the commercial sector, I'm not really too obsessed about the government side, but that thing is rock solid. Now let's talk about the things I'm looking forward to seeing in the Q4 financials. So those are kind of the weaknesses I'm looking for them to fix. So the first thing I want to see is the commercial growth, excluding the SPAC. If you take away the SPAC clients, which I don't really see how it's relevant, but okay. If you take away the SPAC clients, how much independent clients they actually have. I want to see growth on the commercial sector. Now, the second thing I want to see is the breakdown of the client concentration. Right now, it's way too concentrated. The top 20% are holding more than 50% of their business. I'm looking at the notes right here. It is insane. It's too risky. You can't have that client concentration. That has to grow. And they are working on this. They just added 34 new clients and actually increased by 20% their client base just in the past quarter alone. But the work is still ahead of them. Much more needs to be done. Now, the other thing is geographical concentration. Just looking at my notes here, 60% of their business is coming from the US. It's way, way too much as a geo concentration. I understand they're focusing on the Western world, but there's other opportunities. Now, they are actually present in France and in the UK, but that thing has to expand. ROW, rest of the world, we need to see more business just to eliminate some geopolitical risks. Now, the other thing I want to talk about is the SG&A. $750 million in 2018, that ballooned all the way to $1.3 billion in the trailing 12 months. Now, that's kind of in line with the revenue, $600 to $1.4 billion in that same period. And it does include a lot of the new Salesforce additions and the SBC, the stock-based comp, which is not really a cash flow item. I get all that, but still way too high. SG&A of $1.4 billion when you have 1.3, sorry, when you have 1.5 in revenues is just too high. This needs to come down and needs to come down fast. And as far as my final thoughts or conclusion, or whatever it is you want to call it, I think that this is good. Whatever happened in the past 2 months, weeded out a lot of the tourists, the Reddit guys, the hypes, the retail investors that wanted just to make a quick buck. It cleaned up the investor base. Right now, I feel that the investor base for Palantir is as clean as it ever was. Just the people who are actually in it for real for the long term. And I'm loving this. The only thing I hope for is the stock price goes up slowly. We don't pick up more of these tourists, which I hope we won't. Now, the second thing I want to talk to you about right now, this is the cheapest the company has been since the DPO, since the direct listing. It's not going to be that cheap for long. Again, it might dip back and forth in the next few weeks, but as far as the next year or 2 years or 3 or 5 years, this is pretty much the last chance to get on it before it goes up. I'm not telling you to do it. I'm just looking at it for myself. But honestly, I'm not going to get off for the next 5 to 10 years from the stock, so it doesn't really matter for me. And the final point is I think data is definitely the new oil and some. While oil was critical and the most important resource up until now, data is taking over. Data is becoming like oil, Microsoft Windows, and Amazon AWS combined. Everything is about data. And whoever catches that is going to be the new king. And I believe these guys have an option to do it. They have what it takes. Nobody really knows because there's no certainty in life apart from the fact that we're all going to die. We're going to pay taxes. Everything else is a variable. Honestly, it is what it is. Thank you for watching. Thank you for the channel members and the patrons for supporting this channel. Next Palantir video in 1 year. See you later.